welcome to WWM Talks. Today we're here with Steve Wolff, Managing Partner, Rachel Ivanovich, Tax Strategist and Wealth Advisor, Greg Carroll, Certified Financial Planner Professional, and myself, Catherine Magaña, Certified Financial Planner Professional. And we're here today to share with you some insights on the financial markets, some planning tips, and just some things that we're hearing and seeing out there with different clients in the news. So you'll be hearing from us, and we're happy to kind of share some insights. So I thought I'd kick us off today and talk a little bit about the real estate market. In the headlines, we've seen a lot recently about real estate and some of the fees that might be changing. It looks like there's some discussion about potentially reevaluating the seller fees. Currently it looks like the seller covers the buyer and seller fees, and what's on the discussion now is potentially the buyer now having to cover those fees. So definitely a game changer.
And this started with some lawsuit, I think somewhere in the Midwest. I don't remember where, but they didn't think that it was right that both fees were being paid by one side.
So definitely an area that's being reevaluated, and obviously be interesting to see what's to come. But I definitely think that there would be an impact for the buyers. I mean, if the buyer has to come up with these additional fees.
More funding, yeah. That would be difficult.
Yeah, they have to do the down payment, and then
3% of purchase price is significant, especially here in California.
Oh, yeah. When your average price is somewhere near $1 million, that's right.
And then you have the mortgage rates high. So when you start thinking about the buyer, they have to come up with a lot more money. So I think that might definitely would impact the real estate market in general.
So speaking of game changers, it looks like the Fed is done raising rates. Certainly they're pausing, and I would be surprised if they continue to raise rates. I mean, we always said there might be one more, and maybe there will be, but I kind of doubt it.
Yeah, I saw recently, and everything can change, but that in March they may actually cut rates by 25 basis points, and that's really nice to see a rate cut because we've seen a 22 rate, year high right now in interest rates. So
well, actually, but it makes some sense. You can see that the economy is slowing. I mean, we talked about this, I think, in our last podcast that we did. But the economy itself is slowing down. So finally, the Fed is getting what they want. Where we've talked about this, we hear about this, that when is good news, and bad news, and bad news is good news. In this particular case, the bad news that the economy is slowing down is good news that interest rates aren't continuing to go up. So that should have a positive effect, at least for a time being.
Yeah, I would agree. I think you're starting to see a lot of areas of the economy that are slowing. In retail, you're seeing employees being laid off. Sales are going down. Banks, I just saw Citibank today was laying off a bunch of people. Yeah, so I think the lag effects of 18 months of rate hikes is now starting to take effect. So next year will be a little bit slower.
And there are certain people who are still calling for a recession. Sure. I know that it's certainly possible. Maybe we will have a recession, but my goodness, we've been talking about this for at least 2 years now.
I know, and it seems like everyone's always worried about the word recession or going through it, but the reality is it's part of the natural business cycle, and
I think a recession in the long run is a good thing, because really what you're doing is you're weeding out the weak companies that are existing. It's not easy because you're laying off people and all that, so there's certainly a direct impact on employees, but ultimately it leads to a stronger economy. So again, good news, bad news.
Yeah,
you got to clean out some of the excess that's been built up with all the free money.
Exactly. It's going to let some of the steam off.
Correct.
And then you hear of the rolling recession. Is it a soft landing recession? What kind of recession is this going to be? And the reality is, usually we're probably already in a partial recession, and we're not going to know about it till after it's done. So it's just one of those things. I think the market also prices these things in, and it's not fun going through it. And but I think the reality is, like you said, things are slowing down.
Well, it's nice. I mean, here we are. This is around Thanksgiving time, 2023, and we've been talking about this recession forever, and rates are finally peaked. So the stock market in the last 2 weeks has had a pretty good rally. Now, whether that continues or not, we'll find out. But, again, good news, bad. And by the way, there seems to be more flavors for what type of recession this could be and what kind of landing. I'll be honest with you, I'm kind of tired of talking about it.
Right.
Well, it's one of those things, like I said, it's we see it in the news, we've heard about it, and it's just a matter of, I think, getting through it. But I think as we're wrapping up the end of this year, definitely preparing for next year, there's some planning tips and ideas that we've been kind of sharing and going over. And I know we shared this, one of our last WWM talks was tax loss harvesting, and just if there's some things that you want to do before the end of the year. But Rachel, do you have anything else you want to share?
Things that my clients are really thinking about when it comes to taxes are, do I have any money left in my flexible spending account? So
Some people are just wondering if they have any money left, period.
That's a good question, Steve. But if you have a flexible spending account, great time to spend that money. Look at, do I need to go get my teeth fixed? Do I need to do any year-end appointments? Get some new glasses? Make sure you spend that money in your flexible spending account. Otherwise, you lose it if you don't use it. It's a great time to check withholding on your W-2s, or if you're retired, have you paid enough in estimated payments so that you don't get hit with underpayment penalties? Because the IRS and the states do have safe harbors for how much you need to pay in. It is a pay-as-you-go system, and you want to make sure that you're hitting your targets for that.
And you have until what, December 31st, and don't wait until December 31st?
Correct. So given that it's right before Thanksgiving, we still have 6 weeks left in the year, really looking at, look at your numbers, annualize your numbers out. And if you do have some large gains, like Catherine, like you said, make sure you're offsetting those with losses, but be aware of the wash sale rules. And
you may want to explain what wash sale rules
so
are.
wash sale rules are the IRS. If you sell a stock and then buy it back, something that's identical within 30 days, then you can't write off those losses. So you just need to be aware of those rules. Other things that people look at the end of the year, make sure that your required minimum distributions have been met. Those are distributions from IRAs that you have to take every year if you're over age 73. If you don't take those, the IRS will penalize you 25% of what you should have taken. So that can be pretty massive.
And for our clients, Carrie, make sure she contacts you. So if you haven't heard from her or you haven't taken it yet, make sure you reach out to her.
Yeah, we watch those things here. We take care of you.
Has there been any updates on the inherited IRAs, whether you're with the new 10-year rule, whether you're supposed to take RMDs or not?
You're talking about the Secure 2.0 Act that came out, and they keep changing the rules. There are new regulations that are out, so be sure you're talking with tax advisor to ensure that you're doing the right thing.
Right.
And just reiterating what Rachel was saying, I've actually had a few clients over the last few weeks that have looked at their salary deferrals and making sure that they have, before the end of the year, that they're maximizing their contributions. And then those limits, again, change for next year. So it's just definitely something you want to revisit again. But those are definitely some things we're looking at.
Yeah, or look at if you want to make an IRA contribution before the end of the year. But you do have until April 15th of next 2024 to make that IRA contribution.
And then I guess another thing that that's been coming up a lot recently is before the end of the year is if there's any donations that you want to make or cash donations, this is a good time to.
I have a lot of clients that call and they say, well, what's the standard? I want to do the standard. And I always tell them, look, it's 60% of whatever your income is. So if you're doing that, then you're in great position. Yeah. So.
And then I guess the other thing that we mentioned, the required minimum distributions, is if you want to take a charitable distribution,
correct,
then you can do that and not have to pay the taxes. Or if you've already done your RMD for 2023, then perhaps in 2024 you can
something to plan for.
Exactly.
Yeah. I want to bring up something else that I heard this morning. I don't know, it's been in the news lately about ChatGPT, and Sam Altman was the CEO, and he was ousted from that company. And it's interesting because Microsoft came out this morning and said they just hired him,
right.
And they'll hire everyone from OpenAI, I think was the name of the company, who wants to come over. So there's a lot going on in that field.
It was interesting. I was looking at that over the weekend. I wasn't sure if he was going to go back or what was going to happen. But
well, apparently he's been hired by Microsoft. At least that's what I heard this morning. So Microsoft looks like they're going to try to get the AI business without having to pay for it. I think it's brilliant what they
because they were the biggest investor in ChatGPT, right?
Yeah. They were using Microsoft's cloud and that type of thing. So it's just kind of interesting,
Very interesting.
The things that happen in the business world.
Yeah.
So anyway, anything else that we've got going on right now?
Gifting.
Yep.
It's that time of year.
Yes.
Okay, all gifts come my way.
We were just going over, there's some, if you wanted, for those that are wanting to give gifts before the end of the year or for the holidays, there are some gifting limits that you can individually or as a couple, and that's $17,000.
Obviously, when you have children, that doesn't,
never
that's not
ends.
true. There are no gifting limits
No, that's true. I guess you didn't realize that when you signed up to have kids, right?
That's for sure. A lot of things we didn't realize that.
And so with that, if you can do $17,000 or $34,000 if you're married. But what we're also seeing is if you have a 529 plan account and if you're receiving money for the holidays, you might want to add some money to that. So just some little things that you can do to continue to save.
Right. And again, whatever you do, don't wait until December 30th to do it. I mean, how many times have we had someone come in literally the day before the end of the year saying, we need to open up a retirement plan? You can't do it that fast.
Exactly. Other things to consider are if you have appreciated stock and you do want to make a donation to a qualified organization, you can actually take that appreciated stock that you have and gift it directly to the qualified organization. The organization gets the full write-off at fair market value, and you don't have to pay tax on the capital gains on the appreciation. So instead of actually giving cash, you may consider gifting appreciated stock. It's a really good tax strategy.
Yeah, I think it is too. It is good. And I'll take all the appreciated stock you'd like to give to me. So, okay, if there's nothing else, then I think that's going to be a wrap for this WWM Talks episode. And we'll be back. I'm not sure when, but we'll be back. So for all of us.
Great. Thanks for joining us. We'll see you next time.
All right. Take care.